So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome, everybody, to another episode of the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to have you scale and compound your wealth in life so you can give more, all of it away to help MVPs, the most vulnerable people. My name is Brett Swarts. I'll be your host today. Each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their wisdom, insights, and secrets with us so we can all level up with our wealth and our impact. I'm excited about our next guest. They're out of the Chicagoland area, and they focus like a laser on helping you or who might be an investor develop and self-storage facilities and be able to make a return on that investment. I mean, they do the work, but they have an opportunity for you guys to invest. If you're interested in learning more, we're going to be talking all about that, basically building self-storage wealth. And one of our guests is a visionary and entrepreneur real estate developer, a strong track record in self-storage, multifamily, and mixed-use developments. As the co-founder and CEO of Self-Storage Developers, he leads the company's strategic growth. His name is Bill Kanatas. I'll let him pronounce that last name because I might have not done that correctly. And the next gentleman is a seasoned real estate investor, business strategist, and certified Six Sigma Master Black Belt with over 25 years of experience in commercial real estate, project management, and operational excellence. And he's the co-founder and COO of Self-Storage Developers. His name is Ben Salzberg. Gentlemen, how are we doing today?
Fantastic. Thank you very much, Brett, for having us on your show.
Excellent. I'll start with Bill. Bill, for our listeners who know you for the first time, full name, so I make sure I pronounce that correctly. And then second, a little bit about your story and your focus.
Sure. It's actually Bill Kanatas. You were close, apples, potato, what do they say, right? Been involved in real estate developing, I guess it's going on 30 years now. I've been married for 31 years. And first thing, once I got married to my wife, I said I wanted to be self-employed. So we jumped right into the real estate game and never looked back.
Fantastic. And Mr. Ben, how about yourself too? A little bit about your story and your focus.
Yeah, I'm a engineer, education, mechanical engineering, focus on strategy and problem solving, being in real estate, commercial real estate since 1999. I help companies grow and foresee their vision. And I met Bill, how long has it been now?
I think 7 years. Yeah. No, you're stuck with me longer.
Longer time. Time flies when you're having fun, and that's what we do. We really have fun. And so we look at, developing self-storage facilities around the country. And, I'm excited about it. I've saved companies more than $100 million, turn them around, like ADP, Amtrak, Abbott. I work with the CEOs of these companies, grew them, even developing commercial for the Boeing Corporation downtown in Chicago, Illinois. And so I love commercial real estate. It's like in my blood. And, I love what I do. As a matter of fact, congratulate me, Brett. I just got elected to be the SSI Society of the self-storage in Illinois. I'm one of the directors on the board, and I'm really excited about that to head the way in the vision of all the self-storages out there in our area.
Fantastic. That's great. I want to dive right into it. So the marketplace, right, where we're at, self-storage facilities, Bill, how has self-storage done in these past couple of years with where interest rates have gone, and where do you see it today for opportunity for what you guys are building?
Sure. Well, so obviously interest rates have affected the new development, right? So it's a little bit harder to develop these deals and pencil them out. But rates have remained strong. We did see a dip a couple of years ago and last year as well, but those have turned around. And I think one of the reasons, a couple of reasons, one, we had a big merger with Extra Space and Life Storage. And when that happened, I think they were more conscious about getting more people into the facilities and increasing their occupancy and less concerned about the rates. So they kind of drove the rates down. But we saw the bottom on that and that turned around. So rates have come up. And now with interest rates also coming down, we're going to see more new development. And Ben and I have continued our development over the last couple of years, even though interest rates have gone up. We've been bullish on the self-storage market.
And
Ben,
there's so much,
yeah.
demand, Brett. I mean, Brett, you have people dying, divorce, displacement, downsizing. It's really the 4Ds, and that's something that investors have to think about. Like, where are they getting the clients? Why do people stay there? What's happening? What's the future looking like? And everybody unfortunately has changes in life. I mean, every day, and people are building these large buildings, these apartments and condos, and they're becoming smaller. Rooms are smaller, and people have to store things. And so, in order to put some of their stuff, they get public storage. They get a storage facility, and so that's kind of where it all begins. Where all the money happens, so all the magic.
That makes sense. Yeah, smaller units for housing means you need more spacing for self storage. That makes sense. It's just mathematical, and the interest rates have been really interesting to see the drag on cash flow. Do you think compared to multifamily or industrial or other asset classes, Bill, that the self storage kind of separates itself, or is it kind of in the middle when it comes to cash on cash return? What's your sense on that?
Yeah, I think it's right down in the middle, but we were talking about a couple of things. If you have an asset that's already income producing, then the interest rate's going to be less on that because the risk isn't as high to the lender, not to the investor. We're talking about the lender now. When the lender's putting fresh money on the street and it's going to be
Mhm.
interest only and there's not an asset behind it that's cash flowing, the interest rate's going to be higher. On multifamily, you get to the stabilization a lot quicker because you typically lease these up faster or you're just selling them out. So the rate might be a little bit less. But to be honest with you, we're shopping rates right now for a new project of ours, and we're getting in the 6.25, 6.5 range for new
Mhm.
construction. And I think that's reasonable.
Okay, Ben, I want to jump to you now. Just your guys' unique competitive advantage to building wealth within the self storage world. Besides your guys' expertise in your team, what helps you um, to get certainty of execution when it comes to these developments? And are you only developing ground up, or are you also buying existing and rehabbing?
We do both. We do ground up, dirt to doors, we call it. We also do conversions. We know our secret sauce is managing the projects. I'm an operation. I'm an engineer, so my expertise is engineering and to understand the drawings and the operations and putting the teams together. I've been doing project management for a ton of years, as well as executing some type of statistical analysis of where to put these units. What's a good success, what areas are good to focus on, and I have software, I have all the tools. My knowledge in Six Sigma Lean, that's statistics. I'm a statistician, and so to understand where to put these particular facilities is critical because you have to it's like it's the land, right? It's the area. Anything that you do in life, it's where you live, right? How much your home is. It's it's us to all do with the area, and so we have a step up. We are real estate managing brokers. I'm a managing broker in real estate. We work with all the people in the entire country, and so that gives us a leg up in looking at the market, the heartbeat per se of the entire economy out there. And so we have a lot of hats we wear in our company, but we do a great job. I mean, Bill,
Yeah.
being our CFO, knows and understands, what will work with the numbers. Me being a statistician, where to put these things, and and understanding of their area, and then we work together. I mean, not one person wears one hat. We wear all hats, and that's what makes us so universal that we can cross fit each other.
I love it. It sounds like good areas, good teams, good data, and good execution. Bill, did I cover that pretty good? What do you think?
Yeah, you did. Now, one of the things that your listeners may want to know about self-storage is self-storage is really a unique animal compared to multifamily. It performs well in good economies and even better in bad ones, to be honest with you. It's resilient to recession. It's scalable, and it's driven, like to Ben's point earlier, by life events, right? So you got the moving, the downsizing, business needs, and more. So I have a lot of respect for people that develop multifamily, and Ben and I have done that in the past as well. But the reality is, tenants come with turnover, right? So you got the toilets, the trash, legal risk. In self storage, we still have the customers, but it's much simpler in a relationship, right? There's no midnight maintenance calls. There's no evictions in courts. If a customer stops paying, it's a lien process. It's not a 6-month legal battle. So I think it's a whole different animal. And for us, it makes a lot more sense to be in that market. And it's operated by national REITs like Public Storage, Extra Space, et cetera.
Excellent. Let's talk about the wealth building strategy, Ben, and or maybe it's Bill, but the Roth IRA self storage investing on you guys' website here. By the way, if you want to learn more about Ben and Bill and how they can help you with their self storage developers company, go to self-storagedevelopers.com. That's self-storagedevelopers.com. But what do you like about the power of the Roth IRA to be able to go and grow tax free within your self storage facilities?
Yeah, Bill, why don't you take that? I think that would be good for you to take that one.
Sure. The great news for people that have a Roth IRA and they're able to do some self-directing, their money that they have right now in their IRA, they can put that money into a self-storage project, and the money that they're earning on there, the distributions, and then the ultimate sale will go back into the IRA, and that's tax deferred, so they don't have to pay the taxes on that. In addition to that, we have, the accelerated depreciation on these. And because these are self-storage facilities, so there's a lot of parts in there that actually could break down. You got roller doors, as you can imagine, having 800 or 900 garage doors, right? So those are all moving parts. Well, that gives you the ability to do an accelerated depreciation in year one. And then we also do a 179D cost segregation study, which is an energy efficiency. So basically, investors can write off in year one, I'd say anywhere from 60 to 70% of their initial investment. So typically we raise $4 to $5 million on an investment deal, and we have almost all that in year one in depreciation.
Which is beautiful, right? With the big, beautiful bill. Go ahead, Ben. You want to add to that?
Yeah, no, I was let's say with Bill, that depreciation is a huge deal. People think that they're just investing and getting an ROI. You know what that is, but if you're sitting on a lot of money, I mean, you need to depreciate that money to use that incentive, right? And so people don't think about oh my gosh, yeah, self storage, I can depreciate all this stuff and get instead of giving to the government, right? We can do something with that, and so a lot of people don't think about that.
Yeah, the big beautiful bill for everyone listening. They brought back 100% bonus depreciation, and so that's a beautiful thing for commercial real estate investors because it can accelerate and capture most of it in year one, which the longer you can defer and compound, the more you can make more on your wealth. And so that is a nice piece of it. Okay, so speaking of taxes, guys, in IRAs and self-directed, that's one piece of it. One of the things that we do is we specialize in capital gains tax deferral that it can go into Reg D passive or active deals or not using a 1031 exchange, right? And so the big challenge is someone might sell Bitcoin or a business or real estate, have massive capital gains taxes, and they want to go with Ben and Bill, but they got to pay a bunch of tax, right? Now they could go with the piece of it and get some cost seg to offset in the same year, but beyond that, they might have too much gains, right? And so I'm curious, what do you guys usually do if someone shows up and says, "Hey, I've got all this tax, guys, but there's not enough property," or what's your strategy there?
So you're talking about somebody who's exiting another investment, looking to come into ours?
Correct.
Yeah. So, we're talking to our accountants right now to potentially offer, you remember, years ago you had the tenants in common, right? So the TICs.
Mm-hmm.
So we're going to be able to offer some kind of strategy where people can buy ownership into it as they're coming off of another 1031 to be able to identify our property. The timing has to be right. That's the only downside to it. To Ben's point, and the question you asked earlier, are we buying other assets? We're looking at assets right now that are already up and running, so they have cash flow, and we can time that closing with cash flow where somebody can identify that as an exchange for them.
Yeah, we call that the shotgun wedding, right? 45 days to identify, 180
Yeah.
days to close.
That's about right.
Yeah. Go ahead, Ben.
We're trying to solve people's problems, and some of our investors are either funds or family offices. So everybody is challenged with something unique, and it's trying to find the right partner for us that has the needs that we can fulfill for them.
Right. Yeah. And so those who are listening, and if, by the way, if you can find a good 1031, and I think what you're referring to is like a Delaware statutory
Exactly
trust
right.
kind of setup.
DTS, right.
Where you can 1031. So 1031 only works for investment real estate. But if you have Bitcoin or business, you cannot 1031. The beauty of a strategy that we do that might be of interest to those who are listening is you can defer taxes on Bitcoin, business, or real estate, but no 1031 required, no like kind investment required, no timing restrictions. It's through a trust with an installment sale method. And it's great. We just did a large, about $40 million exit for some clients that were selling a big business, and we're going into some real estate deals. And we did another $8 million up in automotive sale, and then we get into some real estate deals up in Massachusetts. And so these large exits, want to find and place capital into places, mostly real estate is what a lot of our entrepreneur clients, but the timing is really kind of thrown off, or the like kind is thrown off. If people want to learn more, you go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. Okay, let's keep going here, guys. Do you have a live deal or a live fund? What is your model? Do you syndicate? Do you do a fund? What's your model, Bill?
So we've done both, but typically we'll do a syndication where we'll do a private placement and bring accredited investors in it. On the last deal that we closed, it was a fund that took 90% of the capital stack, and then Ben and I and our partners put in the 10%. We are currently working now with a couple of family offices, almost under the same scenario, where it's going to be more of a partnership where we'll put up some of the capital stack and they'll put up 90%. But we did start a fund, and it's up and running right now. It's active, and it's a what has it been? $50 million fund, I believe.
It's a $50
Yeah,
million
$50 million fund. And
Yes.
basically, we want to have a blind fund open so the pool of money is waiting for it. We haven't fulfilled the whole fund yet. We're concentrating on a couple of direct assets right now with some family offices. But our goal is to have the fund completely funded and active so we can tie up properties across the country and use that as part of our development. Because, it takes time to entitle these projects as well.
Good. And what's the preferred return on that in the split for the investor?
So it's a 10% pref rate and a 60-40 split in favor of the investor.
Okay. All right. And then what how many projects do you anticipate that will build or buy, and what time frame is your estimation for all of that?
So the fund will allow us to do 10 projects because we put about $5 million equity in each project.
Okay. Over what period of time? How long would that take?
It'll take us 3 years to do those 10 projects.
Okay, good. And then how long do you average hold for those properties?
So we tell the investors 3 to 5 years, but plan on 5 years, because we do have people that are interested in buying it in year 3.
Okay.
So
Got it. And so if someone puts a million in a day to take about 12 to 18 months to build, are you buying the land and then entitling it and permitting process, all of that? Or what is your time frame from someone putting $1 million in and the time they start to get it paid on?
yeah, we usually don't take people's money until it's already fully entitled and ready to go. Architect, engineering. Ben and I have been spending our own money on all the soft costs.
Okay.
So soil boring tests, architect, engineer, MEPs.
But we want to make sure that we're in the deal too.
Of
Right.
course.
I mean,
Yeah.
we want to make sure that, everything's set and everything's done. And then it's when our investors come in and to,
Yeah,
partake
our
in-
equity goes in first.
Yeah, it makes sense. Yeah. That aligns. That's good. I like that you guys are doing the soft cost yourself, getting it all ready to go. And then when you close on the land, and how long does it take to build on average, Ben?
About 12 months.
Okay. So 12 months, and then another 12 months to lease up to 80 or 90% or 60 or 70%? What do you think?
So depends on who you believe. The reason I'm saying it depends on the operator, right? So everybody's got a model.
consider an area. I mean, it's really complex by saying it
Hmm.
specifically, right?
Right.
Okay.
Because it's like demand, right? But
Hmm.
yeah.
If
So
if you give everybody $1, you'll fill it up in the first 6 months, right?
Right. Yeah.
So
Let's put it this way: cash flowing to refi, with a decent interest rate and decent LTV.
yeah, so after 1 full year, you're probably at 50% occupied for sure, maybe a little bit more
Okay.
aggressive on some of the bigger REITs. But by the second year, which is the second years of operation, you should be at close to the 89-90% there, and you're cash flowing very well.
Okay. Yeah, I think the biggest challenge that a lot of people face right now with waiting a year or two, or to get cash, it's like they want cash flow. Do you guys sense that? Like, I mean, they just want cash flow right now. Like a lot of the clients we work with, they're ready to get cash flow now versus waiting. And I'd say they're favoring more of the wealth cash flow now versus the wealth appreciation later. Right. And so I think that's the biggest thing that I've seen. Are you guys seeing the same thing, or what's your sense for the appetite to wait around for a year or two or three for returns?
To be honest with you, I think it really depends on the investor. So the family fund, the family offices and other funds, they're not looking for immediate cash flow right now unless they have
Mhm.
promises to their investors. So to give you an
you have
example,
to.
Mhm.
Hold on for a second now, Brett. You know what? If an individual understands storage, it's a very unique product. It's not like any other product, and that's what I wanted to say, because they understand it. They know kind of the wealth that's in it.
Good. Yeah. I just think and I agree with you guys. And I'm a long-term investor too, and commercial real estate. And so I say it with just insight on this last year and a half has been a weird year, right? Last 2 years really. And so it's fascinating to see the challenges. And I think mostly for multifamily. I think you guys are different. Or industrial. I think those have done better than self-storage and industrial than maybe like the multifamily that was just so far pressed up in pricing, and then these interest rate caps expired, and now it's just these ships are sinking. I call it the year of the jiu-jitsu tap out for the multifamily person who bought, and they've been holding the arm
Yeah.
bar thinking that they could hold on through
yeah,
2025 and survive to 2025, and then but their arms getting snapped, and they're just giving it back to the bank, and the investors are completely tired of capital calls, and it's frustrating, right? Because could you have seen that? Now we found that if you exited when the market was hot, which we did for a lot of our clients, and got them diversified into real estate debt and got them diversified into liquid investments and waited for the market to shift, that's really the mindset. So how do you know about timing? When you guys go to sell a project, right? What are you looking for to determine 3 versus 5 years? What is your instinct on that, Bill?
so we've had, I think, 3 unsolicited offers this year on one of our assets, and we believe that if we wait until the springtime or summertime, it's worth a couple $1 million more. It's like anything else. If you look at the NOI, right? Again, the difference between multifamily and self-storage is, multifamily, when you open up in day one, right? You know the market rate is, I'm making this up, is $1,000 for a one bedroom. You're probably going to get $1,000 day one. It's different in self storage. Self storage will give you the dollar discount to get you in, and let's say the market's $1.80 a square foot, we might give it to you at $1.20. Well, we'll get you at that $1.80, but it may not be for 6, 9, or 12 months later, right? So the revenue increases. So you have to wait until the in-place rent of the people that have been there for 6 or 12 months hits the market rate, and then also the new people that are coming in should be higher than the people were a year ago. So it's a little different to kind of guess that, because you don't know what the move-ins and the move-outs are going to be on a monthly basis, and it's seasonal too, right? So some
Mm-hmm.
people move out, won't move out in the wintertime because it's cold, or when it may not move in the wintertime. But there's a lot of bus action in the summertime and around school and around businesses opening, closing. So I would say, by the third year, you're looking good because the people that moved in a year or 2 years ago are now seeing the bigger rents. And then
Mm-hmm.
by the third year, you got higher rates of the people coming in. So 3 to
Got it.
5 years is really a good window for us.
Okay, Ben, you want to add anything to that? And what's also maybe talk a little about your guys' track record on this?
Well, I guess, maybe we should talk about the certificate of occupancy. A
Mhm.
lot of the people would buy it also, when you pretty much before you even open up. There are people that will do that. And so that's the third caveat to this whole equation. Yeah, it just depends on the price and the market.
Mhm. Yep. No, those are all good. Those are all good answers, and it makes sense. How about you guys' track record, Ben? How long have you guys been building these self storage facilities together, and how many full cycle deals at this point?
Well, go ahead, Bill.
No, that's okay. I was going to say prior to us doing self-storage facilities, we were building express car washes. So
Hmm.
we exited the position that we had in the express car washes in end of 2021, and we
Hmm.
started with
You
our
guys timed that pretty good, huh?
yeah. And then 2021 is when we started the self-storage. So we bought our
Okay.
first asset in 2021 late. I think it was August or November, if I'm not mistaken.
Okay.
We opened up the doors in November of 2022. We still have
Hmm.
that one. That's the one that we've had some unsolicited offers on.
Hmm.
Our second one we sold before we even began construction. We took it through the full entitlement process, everything, the drawings ready to go, and we were about to start construction. And a competitor of ours that was also in the area was very interested in taking that project. So we ended up selling that one for a nice profit for us and our investors. Very happy on that one.
Hmm.
And the third one and the fourth one are now being constructed. So
Awesome.
we haven't closed on a full cycle on self storage after it was constructed,
Okay.
but we did
Yeah.
4 full cycle on the car washes.
That makes sense. Great. And then I'm curious on the car wash stuff. I mean, I don't the exact timing. Do you guys feel like you timed that pretty good on the for the market, or what was your sense on that?
Yeah, definitely. So we were in the expansion mode. We had 4
Mhm.
that were completely built ground up. We had 2 other that were under construction, and private equity came in and made an offer to buy us out. Our operating partners stayed in the deal, and they still to this day are still operating them for. They're our founding members with us. But we took our chips off the table because, to be very honest with you, Ben and I were kind of focused on self storage, and we loved that asset class, been kind of dancing back and forth, and said this is
Yeah.
perfect.
What did you do about the capital gains tax? Did you guys pay it? What'd you do?
That's a secret we can't tell you. No, no,
Well,
no, no.
hopefully
We were
it's
able to roll it
yeah.
in. We have
Okay.
good accountants, and we were able to put it into our self storage deals.
Good. Okay, great. That's fantastic. Yeah. That's really the key. Go ahead, Ben. Did you want to add to that, or are you just is that
No, I think Bill really
Yeah.
good?
And
talked about
Brett, to be
it.
honest with you, I love DSTs. I want to, offline, we should talk more about that. And,
Yeah.
for your listeners, if they're looking for a place to park the money, we're right in the middle of talking to our accountants about setting something up. So this might be actually perfect timing.
Yeah, and just to clarify, yeah, there's two DSTs, right? There's the Delaware Statutory Trust, what Bill is referring to with their company they're setting up. Then there's a thing called a Deferred Sales Trust, which is not 1031, but works for any asset of any kind, and it can still go into funds with Bill and Ben. It's actually great because it's both, and that's why I was asking about the car wash business, because it's equal or greater value for the 1031 for those that are those that are asking about 1031s out there. In fact, we had a client, a $13 million car wash exit out of San Diego, and we sold right around that same time. And it was beautiful because I felt like the peak of the market. They built it all in. They bought the land for about $1 million. It cost about $3.5 million to build. Took them about a year and a half to get everything going. They're in it for about, $4.5 million total. The valuation was $13.5 million. And so they bought it in Chula Vista, which at that area was a little bit lower income area of San Diego, but their cars are like their babies, right?
Mhm. Yeah, yeah.
And so they're pulling the cars in, and it was an old taco stand. And the brilliance of their deal was they told the taco stand guy, "Hey, we need to buy your land because we're going to combine these 2 acre, this acre parcel, this acre we make about 2 acres." And they said, "We need to buy your land because we can't do in 1 acre. And then second, but we'll put your taco stand or restaurant inside of this car wash, and we'll double or triple your sales." And so he was like, "Okay." And so they cut. It was their own. They did it right, and before that they had come from gas stations, right? And so I'm always interested in like the transition between different product types and different timings. And I went to them with our strategy, and they called me 21 days ago. They found me on YouTube and like, "Brett, we don't want a 1031 because A, the market's really high. 2, we don't want to buy something for $13 to $14 million because that's equal or greater value for the 1031. We actually want to sit on the sidelines and wait. So your strategy is perfect. So we sold, we built 2 trusts for them. They received the capital for both of their exits, and then they were able to get a promissory note back. It's actually 3 clients for 3 of them. And then we've been buying dollar cost averaging into hotels, into Bitcoin at 40,000 a coin, into stocks within the trust, all tax deferred. And now we've been waiting for the market to shift for the land values. And finally, we're seeing the market shift. And now they're looking to buy back and start it all over again. But the 1031 doesn't allow you to do that. You have to sell high and buy higher. So
Right.
I was just kind of curious if you guys figured out another way. I like to compare notes because we want to always provide solutions for our clients.
Great. Yeah, I'd love to spend a little time offline with you and discuss that. It'd be great.
Cool. Awesome. That being said, we're running out of time. You guys ready for the lightning round?
Yes, let's do it. Uh-oh.
I'll start with
Yeah,
Ben
let me get
first.
my umbrella out.
Yeah. There might be a little rain. Yeah, we'll find out here. Rain of wisdom is what's going to come right now. All right, Ben, we'll start with you. If you could go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
I'll always move forward and look ahead and
Awesome.
learn from the past.
Love it. Bill, same question to you. 20-year-old self, what would you tell yourself to do?
Yeah, don't be afraid of anything. Just jump in, ask questions later.
Awesome. Question number 2, we'll start with Bill. Bill, what's the number 1 book you've recommended or gifted most in the past year?
Oh my gosh, I knew you were going to ask that. I don't know why I did, but I like Gary Keller, and I've been reading a couple of his books. It's been a while. I haven't read a book in a while. But while you mentioned that, I'm in the process of writing a book myself, and it's about PPMs. And I see a lot of people on YouTube on Facebook that are trying to raise money illegally. So I'm writing a book called Peeling Back the Onion and showing about how the right way of raising capital.
Excellent. Love it. Question, same to you, Ben. Number 1 book you've recommended or gifted most in the past year?
Well, I've read a book called Bulletproof Problem Solving by Chris Kahn, and always reading and how to solve problems.
I love it. Question number 3, we'll start with Ben. What are you most curious about right now?
I'm always curious about how the marketplace is going to roll out. I'm just so interested to kind of to analyze all the data and forecast, right? What the marketplace is going to happen. Right?
100%. 100%. Yep. Same to Bill. Bill, what are you most curious
Interest
about?
rates. I've been kind of following the interest rates. I've been hoping that they'd start going down, and we've already seen a couple of cuts, which is great. And I hope that continues because I think that'll help stimulate the economy.
Yep. Great. I agree. Now we'll go to Bill again. Bill, what is your number 1 leadership quote or theme that you strive to live by?
By your word. If you make a handshake deal, you got to live by it. Even if it's a bad deal, you got to live by your word.
Got it. Love it. Ben, same to you.
I agree with Bill, but trust. You have to have trust, and trust the people that you are talking with, and be open. Be open to what people are telling you.
Communication.
Love it. Last question. We'll go to Ben first, and then we'll go to Bill. After all your success, Ben, helping all the people you helped, and building all that you've built, and solving all the problems you've solved, what would you say is the best way that you practice a stewardship mindset over ownership?
I think that giving back to the community. I am a trustee for a college on the board. Bill will tell you about, I help him with his company. It's called P6. He'll tell you about that, to people who are food disadvantaged, who food insecure. I believe that's most important is to help people.
I love it. Same question to Bill. Bill, what's the number 1 way you're practicing stewardship over ownership?
Yeah, we've to Ben's point, last Saturday we packed 100,000 meals that we donated to veterans. I host meal packaging events. I co-founded an organization called Feed 6, which is www.feed6.org about 14 years ago. And we do about 10 to 12 events a year, and we've done about 9 million meals we give back to the community, all local.
Local, yeah.
Amazing. Incredible. Feed6.org. Yeah, that is an amazing way to practice stewardship over ownership, is giving back to some of the most vulnerable people who are, food disadvantaged and just need some help. So God bless you, Bill, for doing that, and Ben for all the support there as well. For our listeners who want to get in touch with you guys one last time, what is the best place for them to find you? You go, Ben.
You can email us at info@self-storagedevelopers.com. You can give me a call too, 847-338-5517 anytime.
Oh boy.
Excellent.
He said
Bill,
anytime. You heard him, Brett.
Anytime.
Bill and Ben, it's been amazing to have you both on the show, and I encourage you to keep using your gifts and talents to bless people, help them to build more wealth, and to create some self-storage, right? To help people organize and be able to store their things and create jobs and all of the things that it does when you go into development. It's not easy to develop, especially in Chicagoland, if that's where you're mostly doing it. Any states that are hard to get things through. You guys are doing a great work. Keep it up. And also want to thank all of our listeners for listening to another episode of the Build It to Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast and YouTube channels where we're on this journey with you to help gain wisdom from people like Ben and Bill to steward our capital in a way that makes a big impact. We're on this journey from millions to billions, so we can give more all the way to help MVPs. For those who are listening, I want to encourage you to take action today. If you're interested in investing into self-storage, check out self-storagedevelopers.com, self-storagedevelopers.com to connect with Bill and Ben. And of course, if you have a massive exit of Bitcoin, businesses, real estate, and you want to eliminate the need for the 1031 exchange and defer your capital gains tax and invest on your own terms, go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. We have a free download for you for our new roadmap that just got released. I'm Brett Swarts, and we appreciate everyone listening and watching out there, and we'll talk to you real soon. Bye.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.